Hello, Face. How's everyone doing today on this Thursday? A little bit rocky in the markets here in the S&Ps. So I'm going to do a little bit of coaching here this morning. Hi, Ping Pong. Dale, man, I like that. How are you? Hammett, how's it going? Pankaj, welcome to Face. Okay, thank you for hanging out and waiting for us to begin. So I want to talk a little bit about looking at the market holistically as one body with many parts. You know, that's what correlations are about. So when you look at the S&Ps, we keep making successive lower lows. Look, see, there is some divergence down here. And also I tweeted David Brady, and last week in his interview, I know Steve Volke really enjoyed the interview. His line in the sand was 28.60. He tweeted back to me that it's 28.50 closing basis for his line in the sand in the S&Ps for a short signal for him. Okay, so I'm just updating you on, a lot of you guys like David. I think David's great too. So now you know what he's thinking, part of our intelligence gathering. That's why I bring guests in. And oh man, what a great guest we have today. Any of you guys know Jamie Satley? Jamie is very well known. He's an Elliotician. I think he was with FX Daily in the old days. So has his own service, so we'll be talking to Jamie at the top of the next hour. But my point being, S&Ps keep making successive lows, right? And crude made its low on Monday at $60, right? So we know they're kind of married up on the correlation. So what's crude doing? It's actually showing very good relative strength compared to the S&P. So as a trader, I asked myself, if crude can hold up well with all this outside pressure in equities, what could it do if equities rebound? Okay, so if under unfavorable circumstances, risk off, equity pressure, a market can hold up, you have to ask yourself, what would happen if that pressure came off it? So, I still think that the crude looks okay. We start closing back over this moving average, call it 62.50. I'm looking for, at least 50%, maybe 61.8, maybe even a retest of the broken wedge line up here for a B or a 2, my amateur Elliotician. But the point I wanted to make was, if you understand relationships in markets, you can get messages and market tells just based upon what's holding up better than the other, which is leading, which is lagging, and that gives you your preferred longs and shorts. Everyone get that? Give me a Y if you do. I know a lot of you already understand that. Okay, good. All right, so you're getting messages with whatever's holding up pretty good is telling you that's your potential long, and whatever is leading to the downside is your potential short on strength. So that's that covers what I wanted to talk about there. The euro still real neutral, but my bias is for a break to the upside. To me, it looks like we have an ascending triangle. As long as we hold this line here, it looks like about 11.5. We take this out, we're going to new lows, okay? But you could have a flat line here if you look at this level, which shows up better on the 1 hour. Okay, so the 1 hour took out this sharp line, but as long as we're holding here, you have an ascending line breakout above 1220, right? That's the 1 hour. And then you go to the 4 hour, and the breakout would be over 1260. So you just measure from this low to a breakout here can get you 113, and from 1260 it could get you 114, and back under this line, new lows are coming. Okay. Okay. Great. And what else did I want to talk about? Pretty negative day in the metals yesterday, which doesn't make sense since I'm kind of looking for a failure in the dollar. But gold, really, look at this. What a stop hunt. To me, it looks destined to take out 1266. I know some people are positive here, but yesterday had to change the picture with no follow through, false breakout over 1290. And this looks like a flag. So if we take out 1268, bandied about targets that have been talked about for a while, just this range right here could take it down to 1240-ish. Down there, I'm looking to be a buyer depending upon how gold shares are acting. So that's my look on gold. Just want to warn people about the yen here. And whoops. I was negative. You rarely see gaps in FX. I talked about this earlier in the week. And we couldn't fill it. We only ate into it. And I do think eventually this is going to be a magnet down here to finish it off. But I would be very careful down here being short, because you have a 1, you have a 2, you have a 3. We might do some work here. I want to see how it handles pressure. Sometimes your third drive can be a fractal, and you could have 3 on the third one. You could have 3 on all of them, but the last one right here, this RSI reading, I'd rather see a low with the RSI staying above 30. So watch this when equity is under pressure, because maybe now we could get a rally back into the gap. Although I don't think we finish off an intermediate term move in the yen until we get down to this 108.5 handle. And so if that turns out to be true, I'm kind of with Steve on yields, that there could be one more shot down in yields to take out this low for a 3. So I expect yields to bottom and US dollar yen to bottom around the same time. It doesn't mean that we can't have, one more rally back up here first while the yen recovers, and then finish it off to the downside. But to me, it looks like this is incomplete, and that we're going to take out this 235 low, which wasn't really a surprise. It was a 3 calling for a rally back to 255 to 65. So interest rates 10-year still look like they have new lows. 30-year even weaker, looks like we're going to have new lows here for a 3. And then it may be TBT time or a bond shorting opportunity. I know Jamie trades bonds a lot, so it's going to be great to get his view on what's happening with interest rates. I think Rega gave a great review of his expectations and rates, and there always can be one more jiggle in the direction a market's going before a turning point. So you always have to keep that in mind, and you could have an idea and a bias, but you still need price action to confirm your idea, or you just go in with a toe in the water so you pay attention. Okay, so I'm looking forward to talking to Jamie later, Blake. I know you know Jamie, and I think respect his work.
I do. I know. I've been following him for years, and yeah, he's a great Elliotician. He used to be. You're right. He was over at Daily FX for.
Okay.
I think that's where he started his career over there many years ago, and yeah.
When we were young. When we were young. I mean, when you were young. I wasn't very young, right, Paul?
Right.
When you were young.
When I was young, you were still ancient, so you're still an ancient grain.
Yeah. I need blood transfusions. Go ahead.
So this is a really interesting. Obviously, Donald Trump was in a rally overnight in Florida, I believe, and he had made some comments about blame China. It's China's fault that things are falling apart, or that the trade talks have broken down. And
Oh,
so
so they have for sure. Not
well
happening.
that's why the markets are down today, because
Okay.
the markets are like, what? Wait, I thought the Chinese delegation is coming, which they are. Um, they're on their way right now. They're supposed to arrive around 3 o'clock in the afternoon Eastern time, and so we'll know sometime tonight how the talks are going. But remember, it's supposed to be tonight at midnight. If there's no deal done, tariffs are getting increased tonight at midnight. I don't know if
Oh.
that
What
time is.
brinksmanship?
Yeah,
I mean,
like,
why are they waiting till like 2 days before the deal needs to get done by a
well,
deadline to finally get here?
yeah. I mean, it's
You know what I mean?
this is some pressure, obviously, that Donald Trump's putting on China to come here and come and sign a deal quick, because if you don't, I'm going to pull the rug out from underneath you.
Well,
Is kind of
can I tell you something, Blake? I'm a little bit pissed off. I know we're not supposed to be political, but you know what? They're playing games with our wallets, because if these trade tariffs go into effect, everything that we're going to buy, and your wife already experienced it, it's not going to matter to the elite, but it's going to matter to us with the things that we buy every day to, cut into our disposable income, and maybe dramatically.
oh well, it's remember, it's not just it's two sides are tangoing right now. And
Yeah, over
and
our future.
I read the book The Art of the Deal. I'm joking, I never read that, but I mean,
Well, I saw the author on CNN last night. He said he
but
would rename it.
here's the thing: we are really at risk of things escalating a little bit. And I was reading an interesting article today, and then I'll talk about these charts here. I was reading an interesting article this morning. I put it in our ForexAnalytix chat room. I think it was from the Atlantic, about Trump also sees this as a political agenda against Biden too, because Biden, who's like, China's not our enemy, that type of rhetoric. You want to rally your base. You can point out that Joe Biden is very weak on China. And if this goes into a full-fledged, continues, like the economic strain continues, moving forward into the election cycle and season, are people going to take somebody who's more weak on China if things get nasty, or are they going to just keep Trump in there because he's going to fight? And that's that. So the article, and one of his, I think it was his old senior advisors, I think, and I may get all this wrong, but he is basically like, hey, look, if things fall apart, that's actually better for Trump politically. And I thought that was an interesting take. And so I think if I was Trump, I would be thinking, you know what, I'll try to make this work out. I'll give him a bunch of demands, but if things don't work out, it's better for me anyway. You know what I mean? And in the meantime, who's getting the
Right.
shaft? Well, it's going to be the American consumers, obviously. So it could get, things could get worse before they get better, is I guess the point I'm trying to make. And it's unfortunate, it's unfortunate how this might end up playing out for the next 6 to 12 to 18 months.
Not fun to be a pawn.
No, we are just a pawn. We are just a pawn, and there's nothing we have control over at this point. At least,
we could make tips. We could help people.
We can. Hey, look, that's okay. So speaking of which, so here's the dollar yen. Dollar yen's obviously a very, very important support, and the fact of the matter is, if you got to look at some of these gaps, these Asian gaps that look like at some point they could get filled. You're talking about a move. Remember, this happened in very illiquid markets, so there's a good chance that we could trade well below 110 and start pushing back towards the 108 to 106 level. in the dollar yen. Now, what that does to other yen pairs, if you look at like the euro yen, you know, that could take us down into the 120. The pound yen, excuse me, the pound yen is already, you know, looking like now we're going to go to 161% extension, which will be somewhere down here, which will also be an 88% retracement. This could be a, you know, still within Gartley standards down here, but the pound yen just continues to bleed away. The Aussie yen is broken. We're at the 127% extension, although we have a divergent relative strength. You know, that doesn't mean we can't trade down to the low 70s. You know, so the market looks extremely, you know, extremely vulnerable, I guess is the word I'm trying to look for. Look at the S&P. I mean, here we are on key support, and the previous, you can see this right here, previous support, or excuse me, previous resistance, current support, coming out of an ascending wedge in the S&P, that all comes in at, you know, 2860. Here we are at 2863. I mean, we start breaking through this support. I know the lows are right around 2859-ish, or actually we want 55, but you can see we kind of probe through those lows. You know, we start hitting new lows on the day, and the S&P could really see, you know, a much deeper move lower. And actually, you know what, let me get, just so you guys can see like this longer term view of the S&P, knowing why we stopped where we stopped. This is a, here, let me write this out for you guys. A, right? So let's go to A, B, C, D, right? So you got this, you know, AB equals CD, right? You know where we're at. If you're talking about the S&P, you got a double top, false breakout to the upside, right? False breakout to the upside tends to lead to a reversal. So, you know, chances are we're heading a lot lower, and you know, this is a double top, but really it's not a double top until you take out these lows. Now, if you think about this, and I'm going to get a little crazy here for a second, but if you think about like what this actually projects out to, and again, this is not like something that we think about like right now, you know, for the next you know, year moving forward. I mean, you start thinking about if we get below like some of these levels, we're talking about a move to 1700. Now, I think that, like I said, I think that's a little crazy, and I'm not, you know, so much has to happen in order for that to happen. But just, you know, just note that we false breakout, double top, ascending wedge, breaking down. You know, it seems to me just a matter of time before we break lower. And I mean, that's my 2 cents. Does that mean you should short the S&P right now? No, because what if a deal gets done? You know, if a deal gets done and China comes over and they're like, you know, they come over this afternoon, they're like, listen, you know, let me go ahead and bend over. I'll do whatever you tell me to do. And, you know, the S&P is probably going to rally to new highs. I mean, that's you know, that's just a fact. Am I expecting that? I don't think I am. I think the China is willing to roll the dice here a little bit, and try to, you know, to press an economic trade war, so they could, you know, they could possibly ruin chances for Donald Trump to be reelected. If I was China, that's what I would be thinking. Yes.
Sorry to interrupt. Good morning.
No,
I just wanted to say that Beijing have actually made the statement that they said that they would take countermeasures if Trump and his administration follow through with these new tariffs.
Oh, it's
so they're not gonna. Yeah, they're not gonna just lie down, I don't think. But
I don't think
obviously,
either. I don't think they will either. I'm just saying, you know, if they did, then the S&P probably would rally to new highs. I think things are going to get worse. And that's why you have to be a little careful here. And I think that if you're long equities or long risk or short yen, you know, you're buying the dollar yen here off of support, off of this 110 level or 109.50, 60, and you're like, oh, I'm just going to play counter trend. You got to keep your stops close, because fact of the matter is, if we break through some of these lows, I mean, you know, we are going lower, and it could get ugly quickly. So yeah, so Stelios, what do you make of this whole, I mean, the timeline? You know, we've got China coming in this afternoon in the U.S., like literally 8 hours before
yeah, we have
time's
one
up.
day basically. We have a
Less
day.
than a day, 8 hours.
Yeah.
They,
I mean,
they get in at 3, and they're not going to be able to go get Taco Bell on the way to the White House. I mean, you got really like one, you know, a few working hours, a half working day to negotiate.
well, let's remember that this is something that Trump said, that look, there's going to be an increase in tariffs on Friday. End of story. This is not set in stone. So, my opinion, if the Chinese come in and there is clear willingness from both sides to figure something out, they're just going to extend it. I mean, that's my opinion. It's not like that's the date, end of story, it can never change. No, you know, they could easily say, look, the negotiations actually are progressing now quite well, so we're going to give another week or whatever it is. So, you know, I wouldn't be too worried about the fact that 1 day is remaining. I would be more worried about all this hostility that there exists on both sides. That's my problem.
Yeah, and to me, it looks like it could progressively escalate. But they are sending a delegation, so I guess that's important to note. So let's talk about where we're at then. So if you're, you know, obviously if you're looking at like the dollar yen, this is so important right here. This low, and I'll just let me actually grab this line, and you know, that is pretty important, and I can make it dotted, you know, dashed, whatever. Okay, that's going to be an important level of support for the dollar yen. This is kind of like the line in the sand, the do or die, right, for the dollar yen at this point. Matter of fact, I'll go do this right now while you guys are all on air, because I need to make this adjustment anyway. So I'll do this. Watch this. Okay, so here's ForexAnalytix. Okay, 1225. That would be our line in the sand that we have currently. That means, you know, hey, as long as we're below, you know, 112.25, we remain bearish, because it's, you know, it's there. But what I should adjust it to right now is 109.60, right? So what you're going to see that update right now. 109.60. I actually manually just made that adjustment, because really that is the, you know, that's the line in the sand. You know, we break below that, things are going to get a little squirrely. So I think that's going to be important moving forward as a trader. And you go to the S&P, you know, same type of deal here. Well, I think our line in the sand is like at 3,000 or something on the S&P, but or actually it's bullish well above this number. But we should be looking at this as being very important going into the next couple of days. You know, 28.60. Now we're there. I mean, we're, you know, for all intents and purposes, we're just a few points away. But I think that if we get a foothold below that, you know, by the end of the day, you know, things are probably starting to look a little dicey. Now, I'm going to talk about a couple other pairs. Here's the Aussie dollar. The Aussie dollar has a pennant formation. We are near trend lows, and the Aussie's been trading heavy the last couple of days. Yeah, relatives. Oh, here, let me take you over to the 4-hour chart so I can just show you this. So we're trading right at trend lows here, which is 127% extension of this last move higher. You can see right here. Let me right there. You can see it, right? 127% extension of this move. Comes in right around, you know, the lows here, the lows here. So if we break through this 69.60 level, it should be bearish. Now look at the relative strength. The problem with the 4-hour relative strength, you might say, well, Blake, the relative strength is divergent. Yeah, it's divergent, but the thing about divergent relative strength is when it diverges like that, it resets. So if you wonder how a currency pair or an asset class can continuously go down and relative strength not and be divergent, because what happens is relative strength is divergent, it resets itself, then, and I can draw this out for you just so you can kind of see what it looks like. And then let me grab my pen. I'll do it this way. Here's pen. So what happens here is, you know, if we break down, relative strength goes back into being oversold, then it resets again, and so price would go down, consolidate, and it resets, and then we go down again in price. Relative strength goes down again, and then, you know, resets. So just because you have divergent relative strength, that doesn't mean, oh, it's divergent, so you're going to get a bounce. No, divergent relative strength allows for relative strength to reset. If a trend is strong enough, it's going to continue. Then it resets and then, you know, plunges back into oversold, resets again, plunges back into oversold. So so that's why I think you have to be real careful here with saying, oh, look, a divergent relative strength in the Aussie, I need to be a buyer. No, relative strength can break down. So you can't just, you know, blindly go and trade technically on something like that, especially when the macro picture looks pretty ugly. And that's why, you know, we use multiple types of analysis with ForexAnalytix to help us come to the conclusion whether, you know, hey, should I be buying it here? Well, yeah, I mean, if I had some Elliott wave counts that were pointing higher and a harmonic pattern that said, hey, it's time to actually reverse and go long the Aussie dollar, that might you know, give us that confidence. But right now, you know, with the macro backdrop, with what's happening with China, you got to be real careful. All right, with that being said, we do have producer prices coming out this morning, I believe, coming out here in the next couple of minutes. I'm going to pass it over to my colleagues, Steve and Stelios, and I hope you guys have a great trading session. Steve?
Hey, Blake.
Hello.
Good morning, man.
All right. Well, I'm going to pass it over to you. Guys and gals, have a great day. Make sure you stick around for today's interview. Jamie, how do you pronounce his last name, Dale?
Satley.
Satley? Yeah, he's very, very skilled technician. So very much worth your time if you can wait around for Dale's interview. You guys have a great day. Steve, Stelios, thank you guys.
Today, Blake.
Thanks everybody for being there. Okay, thank you.
Thanks.
Thank you, Blake. Bye-bye, mate.
Hi, guys.
Hey,
Hey,
Coach.
Dale.
How are you guys?
Good.
Very,
How have
very
you been?
good.
Pretty good. You know, interesting times. Wasn't that a curse by Shakespeare? May you live in interesting times.
Indeed.
Huh? We are.
Indeed.
Yeah.
They're all,
Humanity has.
whenever
humanity
you're
has had-
alive, it's interesting.
Yeah, okay. Humanity has had a lot more interesting times, though, in the past.
Yeah.
So,
I mean, I think it was interesting that George Washington had to make false teeth he fashioned out of wood. Can you imagine
okay,
that?
so
Huh?
we have. Let's first go to data because we have quite a lot of data coming out.
All right. I guess they had that.
PPI, initial jobless claims, core PPI, trade balance, new housing price index. That's it, actually, for now. So, Stelio, anything fast before we get the data?
Yes, but let's have it after the data. So I have a couple.
The forecast, by the way, is for PPI to drop to 0.2 month on month, and for initial jobless claims to be at 220.
10 seconds before the
10
release.
seconds before the release. Yeah.
Yeah, Data Flash is saying it's
Yeah.
fantastic. It's
Indeed.
squawking it. Okay, let's have a look.
Let's see. I'm gonna increase the volume of 228.
0.2.
minus 3.21 DLNCA.
Yeah. Okay. So basically, basically nothing to write home about. Initial jobless claims, 228 versus forecasting 220, which is insignificant, and PPI as expected 0.2 versus 0.2. The year-on-year dropped slightly from 2.3 to 2.2.
Yeah, it's a non-event. It's a non-event,
Yeah,
unfortunately.
and the US trade balance came in line in essence. There was expected minus 50.2, it came minus 50, so insignificant change there as well. Continuous jobless claims, more or less as expected as well. So non-event practically. So we can, Stelio, before we go to the charts. Go ahead.
Just a couple of things, really. One, we had industrial production out of Spain today. I don't usually look at the Spanish numbers, but it was a pretty steep drop, and it's kind of in line with Germany and Italy, and in Europe, industrial production and manufacturing production is really struggling at the moment. Just something to keep in mind, because the Eurozone is greatly dependent on manufacturing, and if that starts lagging, then it's definitely not a good sign.
Bottom line, stop slacking and start buying Seat cars.
Yeah. And the other interesting thing was we had the Norges Bank, so Norway's central bank, interest rate decision. It was broadly expected to hold at 1%, which it did, but they seem to be the last, so to speak, hawkish central bank around, because they signaled that they're going to hike in June, and quite a clear signal.
Speaking of which, that was not, as you see on the chart, enough to help the USD NOK either break above this solid horizontal resistance area at 880, 882, neither to actually reject it. So we're still testing. This is the third day within the last 5 that the market has been testing this resistance area at 880, 882, and we haven't managed to break higher. If we do, I expect continuation and the move towards the top of this ascending channel, so towards 910.
The question is what happens. The question is what happens now, because the market was broadly expecting them to hike next month, because really they kind of announced it a couple of one or two meetings ago. They forward the guidance basically. Nearly explicitly said that they're going to be hiking in mid-year. The question is after that what happens, because you have I've read a little bit of analysis from various sources and banks and stuff, and there's two camps. One camp says they hike this one and then they're probably going to be done given what's happening in the global environment. But there are a few analysts who are predicting another hike in the end of the year. So after next month's hike, if it happens, which it should, then it's going to move one way or another, because the market's kind of halfway pricing it. So far the market is telling us that whatever has happened so far was more or less priced in. Exactly.
Yeah. And USD NOK remains bullish though, so NOK remains bearish again.
You're breaking up.
US.
Stay.
Okay.
US dollar. Simply because it remains above this corrective formation, first, and second of all, because we are just unable to get off this resistance. So let's see what happens from there. Okay, so that's one thing to consider. Now, if anything else, tell you by the way.
That is it, my friend.
Okay. Now, on the other hand, I wanted to mention here that USD CAD, since we often have a look at them together, they're both correlated to crude. USD CAD also remains near the recent highs. Having said that, and admitting that the path of least resistance remains higher, at least towards this inner channel of resistance, there is really no momentum here, right? And this is something to take into account. So for the time being, there is nothing much happening here. Crude, on the other hand, because I know a lot of people are monitoring it, crude is also consolidating here. It has spent the last 4 days consolidating, and actually, this is, from a technical perspective, this is quite interesting. if I zoom out quite a lot, and they have a reason for doing so, you can see that we have something that happens rarely. I do like to pay attention to candlesticks. So we had this day here, okay, which was quite a long hammer. Then we had an inside day to that. Following that, we had an inside day to that. And so far today is an inside day to this one. So we've already had, like, 2 consecutive inside days, and we are flirting with getting another one. Bottom line, what I'm trying to say here, there is a tactic about playing this. You take the first candle, this one, you take its boundaries. I mean, it's high and it's low, and once you have like 2 inside days in a row, and in this case we have 3 actually, you can either buy the breakout of the first candle's extreme or the breakdown from the second candle's extreme. Okay, and this kind of a consolidation usually when it gets resolved, it produces some follow through, because the market is, in essence, it's coiling. And the term coiling is quite a valid term in this case, because it's like in essence, it's building energy, right? So once this starts playing out, there is some momentum coming through. So that's why I think this is interesting, because once we see crude moving, I think it's going to be enough for a decent move. So nothing more to add for crude, since, as we've already shown, it's the 4th day that it's consolidating. So let's see how this consolidation gets resolved. Obviously, it's going to affect correlated pairs like the USD CAD and the USD NOK that we just showed. Now, I know that Blake spoke about the S&P, so I'm not going to focus on the S&P. I'm going to briefly say that this is a confluence of supports, so I'm paying attention to this area. If you remember, we were talking about this 2870 area, because it's an area, it's not a level, as an area of interest. This is the 3rd consecutive day that the market is testing this area. Keep in mind that the 50 daily moving average is also here. So what happens from here is important. In my opinion, if we do break below this area, then the next area of interest is roughly at 2800, 2805. I think that if we do break below this 2860, 2870 area, we will be testing that one next. I don't find it easy for the market to find support somewhere in between. I think it's going to make it to the next level if that's the case. But I want to focus more on what the other markets are doing. And the Nasdaq had the steepest appreciation. We had twice RSI divergence. The second time was the charm. The Nasdaq managed to actually hold for several days at all-time highs, oppositely from the SPX. And now it has broken below this ascending wedge. Now, the next area of interest is this 7,480 confluence of horizontal support resistance area and the 50 daily moving average. We're not there yet. We're not far away. The IWM, more of a consolidation pattern. I expected one more push higher after this pennant. We got that. We didn't make it the 78.6. We got rejected from this 160 level horizontal support resistance area. Regardless, there is some interesting horizontal support at 155. We need to see a break below it to look for more losses. DAX quite a nice move lower. As you remember, I closed my longs when we were testing this channel of resistance. And I do think that there's a good chance, if we don't hold here, exactly here, roughly at 12,050, I think we're going to make it back to the channel support, perhaps even to this multiple confluence of supports, roughly at 11,800. That's going to be a very, very interesting area for the market. Pay attention to the FTSE here, simply because it's flirting with a breakdown from this ascending channel. Something that has already happened in the Nikkei. If you remember, in the Nikkei, I expected one more move higher from this triangle and then a failure. That's exactly what has happened. The fact that we have now broken below this ascending channel, testifies to the increased possibility of further move to the downside. Next area of interest is at 21,000. Keep in mind, if we are to speak about a correlated market, and I'm going to come back to the indices, keep in mind that the USD yen is testing an important horizontal support resistance area just below 110. So it's quite interesting to see if that area is going to hold. I expected a move lower from there when we were testing this area. We can stall here, because if we don't, then the next area that the market is going to be targeting is this long-term symmetrical triangles support, which currently passes roughly from 108.20. So, we either hold here, or I think that inevitably next stop is there at 108.20. Now, going back to the indices, Australian, I expected a rejection from there. We got it. But so far, this can just be corrective. Shanghai Composite, we expected exactly that kind of a price action that we saw, with the exception, I was actually expecting this horizontal support resistance area to act as support and perhaps to get more upside. Exactly opposite than that, we got a gap through that horizontal support area. So in essence, we sliced through it. And momentum seems to be very strong. So Shanghai Composite doesn't look good. I would actually expect that this area that I was expecting initially to act as support should act as resistance from this point on, if we actually rebound and attempt to retest it. So something like this. Okay. Nifty, nice rejection from there. Nice false break higher and nice rejection. I guess a lot of people got trapped there. Bank Nifty has now also triggered a double top, which would, very simplistic, target a retest of this high, right, at 27,750. And the FXI as well. FXI broke above this megaphone formation, but developed an ascending wedge. We know how these end up. We've actually now completed the target of an ascending wedge, which is retracing 100% of the formation. We've now done so. So it remains to be seen if this megaphone formation's previous resistance can now act as support and see a rebound from here. Obviously, today's outcome of what happens between the Chinese delegation and the US delegation will be extremely important in determining the fate of it. And the emerging market ETF, a very similar picture to what we saw from the FXI, a break above a channel in this case, but then we formed an ascending wedge. We haven't yet completed this. A move towards 41 would complete this ascending wedge's target, and 41 should be support. If we do break below 41, that's going to be quite a bearish development, because there's no real strong support then until we retest these lows at 37.80, 38. So now that we covered the board having to do with the indices, I know that a lot of you are really fond of looking at what's happening with the metals. I want to start by saying how happy I am that my palladium finally is moving again. So I did well for holding the last part of my position. I have an order to close the last part of it here at 1265. We're very, very close. I think that's going to be a great trade. It's one of the trades that have made the year for me. Now, I would start being careful there, because that is an interesting area of support. If we don't find support here, I would look towards this confluence of the 200 daily moving average and the 50% fib. They pass from 1225. Also, if we want to look from an Elliott wave perspective, or here's the extension tool, for equality of legs, that would bring that target down to 1,180. Okay, so 1265, 1225, 1180, three interesting downside targets. And then we have the confluence of this horizontal support resistance area, previous high as well, and the 61.8 at 1135. If we make it down to that area, in all honesty, I might even start looking for a long exposure. Okay. Now, having to do with copper, as I said the other day, since we actually broke below this 284, 285 area, I expect this to be resistance from this point on, and this move lower can easily take us back to 272. A break below 272 is going to be quite a bearish development, opens up a lot more downside, even a retest of this previous rectangle support down at 256 to 57. Gold and silver, nothing to report here. Still a bullish interpretation possible if this is, if this triangle plays out, if we hold the lows, especially at 1265. Silver, more bearish today, but still holding within its triangle. You can see it here. So, a break below, quite bearish. I think it's going to bring us back to $14. A break above 14.90 something, let's say 15, should open up a decent upside. I think the market should squeeze at least partially. We have questions about the cross rates from what I see. Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. We haven't visited those, although Grega gave you his outlook for them yesterday, but it's time for me to give you mine. Euro Aussie, what I see here is still a rectangle. You can see it very clearly here. We've been trapped since the very first days of the year, since 7th of January, since the end of the 4th of January, actually. We've been trapped within this rectangle. Okay, so the boundaries are 157.20 and 161.20. Obviously, being so close to 161.20 once again, the risk reward would favor shorts against that resistance. We've been trapped here for the whole year, for the whole calendar year, so nobody says that we can get rejected once again. Now, if we do break above it, I think that we should extend higher in that case to retest that high 165.50. So in that case, you might want to actually try a breakout strategy by buying solid breakout above that resistance. Now, Euro Kiwi. Euro Kiwi spiked higher due to the RBNZ yesterday to retest this horizontal support resistance area at 171 and got rejected from there for now. Okay, that was also confluencing with this ascending channel. So as with Euro Aussie against this 171 area, I think that the risk reward ratio favors shorts. A break above, of course, then opens up 174.50 as an interesting area of resistance. So clearly defined levels for Euros, Euro Kiwi. So at least if you fundamentally like them at the moment, or you technically like them for some other reasons that you're looking on your chart to the short side, the good news is that you have a very, very manageable risk. So it's worth taking it. If you like it to the upside, then you know what levels you want them to cross for you to feel more comfortable. Pound Aussie, I was looking for a breakout from that formation because this move lower was clearly corrective in nature. I was also monitoring this descending trend line on the RSI for a breakout that would confirm this extension higher. But I had drawn two possibilities. One, getting rejected once again from this ascending trend line resistance. You can even see this larger formation. You can see how large this formation is. It dates back to March 2018, so it's more than a year formation. Let me draw it out for you. This one. See, like a large megaphone pattern here. So once again, getting rejected from that trend line after, breaking for a few pips intraday above this previous high. So this one as well, you have a clearly defined risk if you want to be short, and that is that trend line. Okay, so as long as this trend line is holding, selling each time we get close to it makes sense. But if we do break out above it, you don't want to be short because probably the market is going to squeeze higher. Now, pound Kiwi. Pound Kiwi, I'm curious to see if this break above this wedge was the real deal or something, false. The reason I'm saying that last one is because we had that massive outside key reversal here yesterday. Outside black candle actually. In this case, so far today we have an inside day, an inside spinning top. So I'm waiting to see what's going to happen. But it looks more bullish than the rest that we saw because somebody can say that as long as this previous wedge's resistance is holding a support, we might move further upside. Now, for me to feel more comfortable with being short here, I would at least want to see a breakdown below within this wedge, and ideally a break below this, the confluence of this ascending trend line support, which has defined this whole move higher, series of higher lows. I mean, the basic definition of an uptrend, and this horizontal support area at 194. So only break below 194 would make me more comfortable with the idea of shorts here for the pound Kiwi. Okay. And that, do you think palladium will rebound eventually, you mean? Yes, I think it will. But is it about to rebound now? I have absolutely no indication that that's the case. Absolutely no indication. That's why I'm still holding short, right? 28.42 to 28.36 is the gap that should be closed before the rip. Do you definitely think a trade deal is completely unlikely? Olivier was writing that when Blake was on. Or will the stocks turn back up if the tariffs get pushed back for now? I think that the tariffs will get pushed. Sorry, Antonia was writing that. And I do think that, yes, the stocks will rally at least in the short term if we have even a postponement. You see this market is a junkie of good news or at least avoidance of bad news. So I do think that even postponing increasing the tariffs will bring back some optimism about a potential trade deal coming. So yes, I do think we're going to see a run higher. And this is a perfect level for that to happen from, because as I said before and as I showed on the chart, we are, especially on the S&P, which is considered the benchmark for risk, we are on a confluence of supports. Okay. DB, you mean Deutsche Bank? Huh. I haven't had a look at that chart in a long time, but I can tell you one thing for sure. It still looks like a piece of, I'm not going to say the word, another bearish consolidation, if you're asking me. And we are at the precipice of breaking down. So if you like Deutsche Bank for some reason, by the way, this is exactly what we expected back then, a break below this triangle and a move lower. Actually, it's completely coincidental that the move lower finished where we had drawn the line, because I just draw a line in the direction and we actually reached the bottom there. So what happens from here? I have no reason to believe that this is not another bearish consolidation, a horizontal one, a rectangle in this case. I would expect another breakdown and another resumption to the downside. Having said that, if for some reason you like it, this is exactly the place you want to be buying it, because we're right on support. Okay. Personally, I would not be buying it. I mean, we're talking about a massive downtrend. I mean, Deutsche Bank hasn't had a real rally since back in 2009, right? So it's amazing. I mean, we're talking about a stock of the biggest bank in one of the strongest economies of the world that hasn't managed to catch its breath for 10 consecutive years. So you have no reason to believe that the 10-year downtrend is going to reverse right here, right now. Let me see if I missed any questions. Oh, I think I covered all the questions. So, Coach, is Jamie here with us? I don't see him. Coach, are you here? Anyhow, let me also go ahead and we have a question. Oil on a triangle on 4-hour chart. Yeah, as I told you, oil has spent 4 consecutive days coiling here. You can see it very clearly that it is 4-hour chart. Here it is. You're talking about this triangle. Yeah, it is a triangle. There you go. This is the trend line. Support. Right. So yeah, oil can definitely, break down from here and continue lower. I still hold 2/3 of my short position. And I really hope it just breaks down from here, because there is also the possibility of another push higher, because this can be a bullish triangle. So it can be like A, triangle B, C as a correction towards 64, 64, 30, 64, 40, and then lower. So there is that interpretation as well on the table. Okay. USDTRY, yeah, absolutely. USDTRY actually is still appreciating, and momentum is kind of increasing as well. So, the initial appreciation was quite slow for its standards, I mean, because USDTRY has really, got to, train us to expect some parabolic moves to the upside. So it didn't start as such, but it's threatening to become one. We've now broken above this ascending channel, which shows that we're accelerating. And the next area of resistance is the 61.8 from this corrective move lower, which comes at 634. Unquestionably, Turkey has big problems with its economy. I'm not long-term bearish the Turkish economy, because they have one thing going for them, which is extremely important and almost none of the Western economies has, which is demographics. They have one of the youngest populations, and if they finally get some proper government at some point, I think that Turkey has some good potential as an emerging market. But currently it's been hindered by political issues, which led to the very fast depreciation of the Turkish lira, which in its turn forced the central bank to increase rates, and which in turn brought Turkey in the situation it's currently at. Possible cap and handle formation on that USD TRY chart. Yeah, too early, but yeah, absolutely. I mean, that's, I guess, what you're talking about. If we get something like that, and yeah, that's going to be a cap and handle formation. Absolutely. Of course, we're some way from that to take place, but yeah, absolutely. Coach,
Yes, buddy.
I see that Jamie is with us. Now you're
Yeah.
finally with us as well. So why don't you go ahead and start your interview? Looking forward
Okay.
to hearing Jamie. We haven't
Okay.
had him in a long time.
Yeah, probably a year. Maybe it's been a year.
Yes.
Anyway,
Yeah,
you know,
might be.
friends are friends no matter how much time passes in between seeing each
Let
other.
me
Like,
let me advertise, by the way, because I know he's not going to do it himself. Jamie has written a nice book about the markets and sentiment in the forex markets. I've actually read it. It's very decent and shows you how sentiment and how the crowd can very frequently pinpoint highs and lows in the market. So if you haven't read it, go ahead and buy it.
beautiful, Steve. How long did it take you to read it?
To read it, I read it within a day. I usually read all books within a day.
Yeah, you're a speed reader, Evelyn Wood.
I am.
Okay.
I am a speed reader indeed.
Okay. All right. Well, you know what? I didn't know that, Jamie. Welcome back. See, your rep precedes you with the partners at ForexAnalytix. Congratulations on the book. I'm expecting an autographed copy sent to me FedEx after this interview, buddy. How are you?
What's going on, Dale? How are you, man?
What has
What's
it been
going
a
on?
year?
How are you?
I'm good, bro. I'm running my race.
I don't know. I don't know. The last time I was on, I don't know if it was a year or if it was back. It might have been like last summer or last fall. I'm not sure. But,
Yeah.
It's been a while.
Yeah, good to have you back. And Steve mentioned, I don't know if you heard it, Steve has read your new book about sentiment in the FX
It's
market.
actually not a new book, but yeah, I've read it.
Oh, it's not new. Okay. Well, I want an autographed copy, Jamie.
All right.
All right,
well, the publishers never gave me a lot of books anyways. So.
Oh, okay. Okay. All right. Well, I made a few pips this week. I'll go out and spend a few bucks. So, Jamie, I want to get to the markets with you, but it's been such a long time since I've asked you this question. I don't remember, and I usually have the memory of an elephant, but I know you made a major breakthrough in your career with Daily FX, but I forgot how it started for you. Point A, your first entree into the business and becoming a trader, because, I want to give people hope that, it's not easy to get going, but if you have perseverance, like I know you have, you can make an impact on the industry and your life. So how did it begin for you, man? Who do you blame for you getting involved in this?
Well, I guess originally I'll blame the sickness, right? The market sickness on family from farming.
Oh, that's right. Was it cotton?
Yeah, that's right, cotton.
Oh, now it's coming back to me. Okay, so yeah, all right. So right away, your family was probably hedging cotton, and you started to watch prices fluctuate, and you had an interest when you were young. Are you there?
Yeah. You cut out for about 5 seconds there, but yeah.
Huh. Okay. All right. Well, cotton farmer. I remember Jimmy Rogers saying during the last commodity boom that the guys driving Ferraris weren't going to be venture capitalists, but they were going to be guys driving a tractor in the cotton fields.
Yeah, that's right.
All right. So
there was a period back in the 70s when the most millionaires per capita were actually in Southeast Missouri. In Sikeston, Missouri, was the most millionaires per capita because of cotton farming.
Oh, cotton in Missouri too. Okay.
Yeah.
All right. So I know you're in that state, and I think it's the first time we've talked about the yuan together. So you're looking at this yuan. Do you consider it a linchpin for what's happening in other markets? I know some people watch the yuan against gold and You know, the Chinese said they're not going to weaponize the yuan, but you know, we have a lot of brinksmanship happening right now in Washington. Tell us what you see and what the implications may be here.
Sure. Well, going off just the chart here, you've got a we've got a really clear, what I just call a clear structure. I mean, if I zoom in, let's see here, we'll get rid of, let's just go to a weekly chart here. All right, so here's a weekly.
Right.
And if we draw our fork, the importance of the center line and how markets have been trading around it for the last couple of years. So, right, so we had here the big breakdown in 2017 and into March, and this was real. This, I mean, this to me, this is the what's driving everything. You know, this was the dollar decline, right? Not just here, but euro and elsewhere, and then this was the big dollar rally, right? If let's just take this and compare, let's say DXY or something, okay? We'll go DXY. Actually, we'll have to go here. Let's see.
Okay, I see.
I mean, yeah, right. So this is where the emotion has been, and to me, this is where things are clear. Volatility clarifies, right? So when you have markets being like the euro right now, which has been so quiet for quite an extended period of time, I find it really difficult for me, the way that I trade and look at the market. It's difficult to kind of analyze a market from a sentiment standpoint and from a technical standpoint when it's not really moving.
When it's neutral, you need extremes, right?
Well, not just extremes, but you need to feel it. You need to be in the rhythm,
right? Instead of a chop
right?
fest.
And there's just when there's no music. So exactly. So we've had great levels here with dollar yuan, and you know, just going back to this chart, right? Coming in here early in the year, why, you know, did I have an idea that maybe the dollar was going to turn higher? You know, support. Okay, we came into support here, and sure enough, you know, if you want to go to a little more traditional indicator stuff, you had some nice divergence here on the lows, right, with RSI and all that stuff. A little base. So yeah, this is a chart that bears watching clearly. As I'm sitting here doing this, we just hit the 618 of the drop. Here we are.
Yeah.
You know, now to me, the more important level is going to be the center line up here, which is going to be more like, you know, 691, 690, 90, 691. And you can see why the precision with which the market has turned it around the center line right here. So, oh, am I there?
Yeah, you're here, but you are cutting in and out.
Okay.
But we'll just continue. So that center line there, Jamie, that you're looking at, do you have a macro view that the highs that we made in September of last year, that we're going to take out that big round number of 7, and would that be a problem for, say, S&Ps and the dollar being too strong if that happens?
Probably is my view. So, all right, my view on this.
You're looking to short it up there.
Up here, sure.
Yeah. Okay.
You know, look, if you do the kind of the math on the tariff stuff.
Yeah.
Right, and because the only way that they can allow, you know, kind of take this and
with a weaker is to debase the yuan.
Yeah. So,
okay.
You know,
weaponize
if you some back of the envelope math on the yuan, I mean, if it is, I mean, it gets you up towards, you know, probably 710, 715, which is going to be up here on this parallel anyway.
Okay.
But like, you know, I'm not forecasting that it's going there. Like, you know, it's kind of, kind of take it as things happen and take in new information. So, you know, when we were at support, and you started to see reasons that you should be a buyer, as noted before with the, the divergence and whatnot, and sentiment the way it was. Now, I don't know, we'll see how we head into the weekend, but like, I'd be looking at two levels to trade here. I'd be looking here again, the 691 roughly, and then I'd be looking back towards the 679 to 680 area. Just look across the chart. This is the 38.2 of this down. Yeah. Right. This was support here back in August.
Right. And the lows that held this spring, if you look left,
spot.
The lows that held this spring, if you look left, were a very important level, 670 on the way down. That's 670. So yeah, so the market has a memory. Do you look left, Jamie, or are you looking right when you trade?
Well, I'm looking left first, because if I look right, there's nothing except for white spaces.
So that's where you have to use your imagination, my trading warrior.
Yeah, I guess. Well, I mean, yes. No, totally. Right. I'm all about imagination, but the first thing I'm doing is looking left. That's for sure.
Okay, because the market has a memory. So you're looking at this one thing. I was looking forward to talking to you because I know you're pretty active, and it probably plays into this. And you love bonds. You love trading bonds, right? Interest rate type instruments, and there is a big debate going on right here. To me, the 10-year looks like it could make another low, take out that 235 yield level, and that might be it. I'm actually looking for some exhaustion up here in the bonds. I'm wondering what your work is saying here. Oh, you're looking TLT?
Yeah.
Okay.
So.
All right.
Yeah. All right, so let's go TLT. Here's why I'm going TL. We can look at the 30-year as well, but
TLT is great. I trade it. I think it's a great proxy. Very good ETF that's liquid.
It's a great proxy. Yeah. It actually channels better on this long-term channel. So yeah, we are at what I would call a huge energy point right now in the bonds and TLT, what have you. And so we go back to the 2007 low, right? Draw your channel. Look where we are, okay? 200-week average, all right. But more importantly, we are at the center line of the entire channel, okay? So we go back to, let's go to the daily chart. And you can tell me, just looking left on this chart, I would say that this area, the center line, is pretty.
Yeah, it pivots, dances around that pretty good.
And it's been even more. It's been even more important, with precision, I should say, over the last year plus. So 14 months. This is March, but you can see the action that you get around this. So big breakdown, right? Resistance, 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 resistance.
Now we're trading above it.
Big gap up. Yeah. So how we resolve here, I think, is to
the upside. One to the next line.
I think it's to the upside. Like I head into, so we're gonna open up here. Bonds are up a little bit, not much. I mean, you're up 42 basis points right now on the 30. But yeah, I'd be looking essentially at 120. Call it 124 over the next week or so if you can get it. We're right now 125.14. We're up towards the highs from yesterday right now.
Okay, so where's that next line come in? And that's not a center line, but was there pretty good action on the next span line above it? That it looks important to you if we got there?
So this level up here is going to be 130.
130.
Well, so I don't. The more important level to me is 130. Is going to be up here. Just bigger picture. I'm talking 137. And here's one reason why we talk about that. So in median line analysis, we talk about a concept of symmetry.
Okay.
So in symmetry, right, you're talking about going from this we call the 25 line, right, 25% up in the channel, 50 line median, 75, and then 100 line the top parallel. Well, where'd you come from? We came from 25 line, right?
Right.
Look what happened when we came from the 25 line last time.
Interesting.
You see where we spiked into?
Yeah.
That was the October 2014, like some people called it kind of a flash crash. You remember that flash crashing yields, but that was 2014. That's where we went to. Okay, that was the ultimate target, and then we ended up going to the top of the channel. But that's where you're looking now. Can we pause somewhere else? Of course, but this is my focus. This is where I think the market has a magnet. This is where I think it's headed.
Okay.
And
137.
Yeah.
Okay. And closes back under 124 might change the picture for a little while.
Yeah, absolutely. I mean, you start to get back.
Very tight risk trade. Nice R to R if you.
Well, that's the best part to me about median line analysis is you're trying to trade around the edges, and so you're really by definition trying to skew in your favor. So take a lot of losses, but they're really small.
Right.
And then once you catch one,
Right. Yeah, And I mean, this one you're talking about from 24, where it's at now, risking, maybe a point to make 13. Pretty good profit risk ratio if you. Yeah, and let me ask you something though, Jamie, because this is my short.
Don't get me wrong. You too. I mean, you'd be.
Okay.
You'd be out of stuff. You'd be out of some stuff once you took out these highs over here too. It's not like I'm going to say it goes to 137 and then we spike up through 129.60 and go 130 and then I'm like, well, I'm not going to do anything about it.
Yeah, you book things along the way and hold a core position. That's a question I want to ask you, Jamie. It's probably my weakest suit in the business. It's one thing to make a great call and to make a great trade, but for a lot of people, including myself, a great hold is really one of the most difficult things to do. How do you accomplish holding positions for longer term objectives?
Number one, I'd say stay away from the screen, I guess, would be one of them. Go do something else for a little bit rather than obsess. Stay away from too many intraday charts.
Okay. So manage, or if you're going to stay in front of your screen, do you ever just manage your position from a higher time?
I mean, so on that note.
Yeah.
Yeah. Wait for daily closes, or maybe set some rules. Like say, I'm not going to trade during one of the rules that I've tried to set. I say try to set because I did set the rule. I'm not very good at following it all the time, but is I don't like to trade after or at least FX. I don't like to trade FX after Europe closes.
Interesting.
So notwithstanding like a Fed day or something like that, but after it's like what my mom used to tell me, when I was going out as a teenager, like nothing good happens after midnight. So, nothing good happens after Europe closes. For the most part, you kind of go into a drift, right? And you can overtrade that way. So.
Okay. Well, that's an interesting rule. So, what time are you getting up in the morning there in Missouri to trade Europe?
Well, it depends. Lately I haven't really been having to get up too early because I've been doing a whole lot. So, if we start to move again, which we will at some point, then, I don't know, I'll be up at 4 here.
Okay.
So
I remember
5 o'clock in New York.
I remember last time when I brought up S&Ps, you didn't even want to talk about them. You want to talk about them today?
Yeah, let's go to some S&Ps. All right, so here we go. Let's do this. Let's go.
Is there a fan line that goes to the sun?
Well, we've got some pretty crazy things here.
You have an angle? That's parabolic fan line?
Well, all right. So this is, let's go to the NASDAQ composite.
So you have throwovers even on your extreme fan lines.
Okay, so here is the NASDAQ composite, and it is kind of a bit messy. We can get rid of some of this crap over here. I was sitting here playing with charts last night. All right, so here's the NASDAQ composite. Actually, it's probably a little cleaner on the Qs. Okay, so here's the Qs. All right, so here's another concept of median line analysis that we can look at. this is your original slope that we call it. Okay.
Right.
This is any time frame, by the way.
Okay.
You do it on any time frame. But your original slope, this is your original angle. So like this is, at the most basic core definition, this is your uptrend angle line in the NASDAQ, okay, from 2002 to 2008, all right? Now, you take the parallel, extend it over here.
Yeah.
That level was more or less resistance. You broke through, you went for the run. The distance between here and this line is the distance between up here and the center line. That was resistance, okay?
Interesting.
Once you broke through that, you go to the next level. The next level up is the full width. And look where we stopped.
Yeah.
Okay. Now that's just a channel.
Right.
If we draw the pitchfork, right, which is a channeling technique, the pitchfork is the steeper one. Well, that's also where we stopped, at least back in 2018. So that's still higher. I don't know if we're going there. I have no clue. But I do know that we've stopped at a place that would not be considered random, right? So that has my ear. And when we then go down to a shorter time frame, and I am going to go short term on this, I am going to go, let's even go 10-minute here. Okay, this is now the Qs. I'm looking at the Qs here, and this is a channel that I've drawn in from the late Jan lows, which channels beautifully. And we are going to open right now. Qs are trading 183.75. We are going to open right here on this line right now. Okay.
Wow. Yeah.
So is this 5? It may very well be. You know, I have, you know, I'm of the mind that you probably want to, if you're short, you probably want to pay attention to this coming into this open. You've also got 182.83 high over here from March 21st.
Let me ask this hypothetical. If this is 5.
And you got a 50-day average.
Okay, so you have confluence there too.
Mm-hmm.
So my hypothetical is if it holds in that region and, you know, we could poke through trend line.
50-day average.
Okay, we hold there. And since it's a 5-wave count from the high, would you be expecting a 2? Or is this a 5 that's corrective and then a new high? Would you be expecting a failing rally after a 5-wave sequence like this?
That I don't know, but I do think that the trade from a risk reward standpoint is going to be to look for, and I think you have to pay attention to the character of the rally. So if we come in here and we get, you know, we screw around for a little bit, and then you get a big move up towards one, you're going to be looking for resistance probably up near 188.10, 188.50. And the reason for that is that 188.50 is the high from last year, and 188.10 is where we owe. Okay. So I'd be looking for that level as maybe where you'd fail. Another way, what I was saying is watch for the character of the rally. If it's a rally on clear news, right? Like if it's a news-induced rally,
like a trade deal.
A trade deal, right? Those are the ones you want to fade. Right, those are the ones you want to fade. So that's where I would go with that from a tactical viewpoint. Yeah, so that's what I'll be looking for.
Okay, and any instrument you want to wrap it with?
Yeah, I actually wanted to look real quick at. I want to show you dollar yen. This is one that we've been on for a while, and I think that we may have just seen the high in dollar yen for the entire consolidation that started in 2016.
Wow. Implying what? Taking out 104 heading into the 90 range? Wow.
Implying eventually the mid 90s.
Okay.
So if we go here, all right.
Well, that would make sense.
Here's our big A wave and
bonds.
Right?
137 bonds and 93 US dollar yen kind of makes sense, doesn't it?
Yeah, certainly. And if we've got, all right, 3 waves up, 3 waves down, 3 waves up, 3 waves down, 3 waves up. All right. So we've got ourselves a big old Elliott triangle. You got a 200 week, you got a 50 week. I'll point out too, that on every time frame, price is below every important moving average. Okay. You've got, you know, the dailies, weeklies, what have you. There's no real solid, say, uptrend objective, like moving average type support that's sitting below the market. So this is kind of my bigger macro view on dollar Japanese yen. If I go to real quick a short-term chart,
and I wanted to ask you about sentiment because you wrote a book about it. So does sentiment also line up in favor of a decline?
With yen?
Yeah, US dollar yen.
With dollar yen?
Yeah.
Yeah, I wrote some things on just over the weekend. There were a couple articles, and it's not, it hasn't been so much of a dollar market, right? But there was a Reuters article. I saw a Reuters poll. I don't know if you saw that one about, strategists are now calling for a stronger dollar. This is after 2 years of calling for a weaker dollar. There's some capitulation there. Yeah. But it's not going to be like a dollar, like we're seeing dollar won higher, right? Like you might get, Aussie might get hurt for a little bit, but in that sense, I do think you want some dollar short exposure, and here's the place to do it. Now, here near term, this lines up beautifully with what we were just talking about with the indices. We have a 5-wave down on dollar yen, and we are right at support. We're on it. So I think we get a bounce here, and then you want to be shorting up at 110.80 to
because it didn't fill the gap, and this is the first gap on the chart. It left Sunday. I think it's significant that it wasn't filled when it tried to this week. Don't you?
Yeah, absolutely. This
may not be filled. Yeah, it may not. A lot of people will think the gaps are always filled. Yeah, maybe 10 years and bank account ago, but they're not always filled. You could go broke trying to trade that way. So, wow, man, what a great.
Yeah, I'm pretty sure that the euro gap from
that's going to get filled.
It's still not filled, right? But I don't think you want to be short and waiting for it to get filled. So.
Yeah, that's a great analogy too on the Macron victory. Jamie, let's not let another year pass. Your content and your eyeballs are, they're diamonds. Okay, so why don't you show people, since sometimes it takes a long time for you and I to get together, where they can find you.
All right, sure. So this is the post from last night, actually, I'm clicking on. So you can see this is the dollar yen chart from last night. We're looking here, boom, all that good stuff. And you just go to SB Trade Desk. So SB Trade Desk, and that's it.
You and Michael are still Siamese twins, right?
Yeah, that's right. Michael.
Okay.
Boy, all right. And we're together in this venture. So
I hope that your subscriber base triples by the next time I talk to you.
Oh, Dale, you're the best. This is a good way to start the day. Let me tell you, I like talking.
And I miss talking to you, Jamie. So let's not let this much time pass between the next one, and I'm already scheduling for August. So after the interview, let's get together and set something up for the end of the summer. Okay, bro?
You got it, man. You got it.
All right. Everyone, that's Jamie. You could, at Jamie Satley, his Twitter handle's at Jamie Satley, and you can go to his website. And you have any trials going on or anything, Jamie?
We do trial. Do 40% off for the first month.
Okay.
And if we do anything else, any other trial, I'll certainly tweet it out, and I'll include you on the tweet so that all your.
Okay, I appreciate it, man.
All your know.
Okay, so thank you, my trading warrior brother. Good hunting, and thanks for edifying the FACE community today, Jamie.
All right, Dale. I'll talk to you later, man.
All right, bro. All right, everyone. You're welcome, Hamit. I'm glad you enjoyed it. Okay, and that's a wrap for us. We'll be back here for TGIF. Good hunting. The rest of the day, go join Blake and the guys in members chat. Remember, don't just count your pips, count your blessings. I do. It's okay. Don't worry about caps, Alina. And I don't sweat the small stuff. And you know what? Most of it is. So enjoy the rest of your day, warriors. See everyone for TGIF tomorrow. Adios. Thanks again, Jamie.